Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, April 27th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. A bit of weakness in the previous session here, mostly digestive with a downside bias here for the ES. It did end near the lows of the day. A bit of a pop there on earnings after hours, but you're seeing right now a little bit of strength here early in the day. Ever since we hit this high, remember we mentioned on that day, for all intents and purposes, we have now reached the edge of the range, and we should now be looking for potential rejection that could bring us back down the range and perhaps even across the range. And since that day, we've seen lower highs and lower lows. We've seen the stop run day down a couple of days ago, which pushed price down to new lows here on this move. Biggest down move we've seen in a while. And now morning strength could be an opportunity for bears to defend day over day here as we likely continue to rotate back toward year-to-date value right here at around 40.35. You also have the 4,000 level right here, the median point of the range, as a downside target, that zone. And then after that, you have a continuation toward the edge at 38.68. So right now, to have a little bit of strength here, bears could be looking to defend that morning strength for a continuation down. And as you look into next month here with the pivot range that's higher than this month's pivot range, you have a lower close against that pivot range, so it's a higher value with a bearish bias. That means that even next month, we could see early strength into the pivot range next month and be met with weakness for a continuation back down. So any bounce right now could be sold near term until proven otherwise. If we take a look here at the NQ, similar price action in the NQ here, although this one is above the previous session's high. So this is going to be important right here. Best case scenario for bears is for that previous session's high to be rejected. In a downtrend here, a failed new high tends to be the best opportunity to sell for a continuation to the downside. We are right there right now, developing just above that previous session's high. We've already seen an early reaction, which put in the top. That reaction on pre-market GDP data and initial jobless claims data. GDP coming in less than forecast here, and again a strong pivot high above the previous session's high. That could be the best opportunity for bears to defend and rotate this thing back down to new lows. So keep an eye on the previous session's high. If we take a look here at crude oil, this one fulfilled the downside target of 75.70. That level right there was filled. The previous session, we mentioned the early strength into the midpoint was defended. We've seen a breakthrough 3-day lows and a huge stop run day down yesterday. So a massive continuation down, really much of it in the final hour there, where price really dropped off. So right in the final hour of the day, big time sell-off where half the day's range was put in. That put us back below that 75.70 gap fill and puts us on a path toward 72s now. 72s has been the big time lower edge. The one time it went through, it got as low as 64s, came back, and again, when we formed this higher low, we were looking for price to push back above 70 and through 72 to open up 82 to 83. We're now making the move all the way back down across that range, and 72s could be the next level below to go get. If we take a look here at gold futures, gold right now down barely here for the day, down about a 1.5 points on the day, but it was higher. We've seen price push up. Again, GDP data pushed this thing to a strong high of about 2013, and right now that's pretty much the high of the day. We've sold off since then, are now back near the lows. You can see right here, this is the 2030 level right there. After this strong higher high failure, price dropped below it and could never get back above that level. That's starting to look a bit bearish here with a narrow range that has developed now at a lower price. So you had the higher high dropped, and now you have this narrow multi-week range here. If you count them off here, that's 3, 6, 9 days of compression, and the amount of energy in that range If we drop this down to 9 points there, you'll see easily 100 points of a breakout move could be ahead. And that could be rather shallow considering the volatility here lately has been very narrow. So 100 points easily could be the next move once we get a breakout. For example, if we're at 2,000 right now, 1,900 would be a 100-point move. If we go a little beyond that, say 150 points, 170 points, you start working your way right down to the previous year's close. 1830 is going to be the magnet in that case. Lastly, taking a look at the YM here. The YM up about 0.5% right now. The 2-day drop off here off the 34K level was tremendous. Yesterday we mentioned 33,800 would be important. If it can't get above 33.8, we start working our way down. And this thing has had a very good downward move ever since the double top up here. Has pulled back again, wasn't able to get above 30K, 34K, dropping down now and working its way back against the range here. 33K could be the next level down below. If you recall, this is the range right here, that 33K up to about 34.5. We went almost into that point, getting a high as 34,287s, now dropping back down. We could be looking at a move back toward 34K, maybe 32,750 could be in play as well. So still headed downward at the moment, and any bounce could offer a selling opportunity until proven otherwise. So right now, seeing price push back above the previous session's midpoint. If it starts to give up the mid, we may start to see an inverted checkmark day develop. If price can hold above the mid, perhaps a 33,800 test could be ahead on an intraday basis. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.